The 4-year crypto cycle. For years, we have talked about the 4-year cycle. Everyone has been really following this time frame of the 4-year cycle, that it's going to happen every single time over going forward, that we have this specific time frame to follow on a bull and bear market. And this time around, it feels as though almost everything has changed. Everyone has now come to the conclusion of, all right, well, are we still in a 4-year cycle? Is that still a thing? Is it going to repeat, or is it finished at this stage? And the number one thing that I really have stressed in the past is, if it seems too predictable, if it seems too good to be true, then it's most likely not going to follow through. And what I meant by that is, if we think about the 4-year cycle, if markets were that predictable, everyone would be winning. I don't think that we are following a pattern, a time pattern to the T. I do think that this time around, yes, things have changed. Yes, things are different. It's obvious. We have ETFs. We have institutional grade adoption. We have policy updates now from the US government. The, agencies that regulate markets are now fully positive on crypto. Things have shifted. But the main thing that we are focused on here is, will we see altcoins behave the way that they have done in the past? And I do think that we will. We have to get through this extremely depressing and frustrating time in the market. And I know that it sucks. I understand that it sucks. But all we have to do is make it through this. And I do think that we will see moves like we've witnessed back in 2021, even 2017 and 2018. But we have to get through this depressive phase first. And that goes even with XRP, right? It's very obvious that the last couple, days, the last couple weeks have been extremely frustrating. I mean, going all the way back to roughly the middle of July, I've talked about this even when it comes back to a few altcoins, because XRP is kind of an outlier. Right? XRP is one of the few altcoins that actually made a new high back in July. Most altcoins have been down only since going back to January. Some altcoins spend a year. That's why I do think that it's so important to focus on the fact that, yeah, things have shifted. Things are a bit different. But one thing that's not different is going against the herd. Right now, sentiment around the crypto space has hit a new low. We have this from Coin Bureau. Over the last couple of days, it has come to my attention that we are now witnessing more and more users having money frozen on exchanges like MEXC. This is a big issue, and it's an issue that plagues the crypto space. It's at a time where these exchanges are not fully regulated. It's a big issue. This is why, when I've always mentioned, if you wanted to hold your crypto in custody, it could be cold storage. It doesn't matter where you are holding it. Never hold it on these exchanges. Now, I will say ITrustCapital does offer a premium custody account, which provides you institutional grade custody. This is a US-based company with live client service and support. And you can buy and sell crypto 24/7 on this platform, which is a closed loop system that is extremely secure with low fees. We could also see here that ITrustCapital does provide you with every single thing that you possibly need when you are buying, selling, or holding crypto on their platform. If you guys do want to sign up with a premium custody account today, you guys are more so welcome to do so through my link that is down in the description below. If you deposit $1,000, you get a $100 funding bonus on top of it. And with that being said, let's jump back on into the video. We have market sentiment hits a new low. As per Alfractal, crypto sentiment is now at its lowest and most negative level since April. This metric has been 90% accurate at spotting local bottoms when it turns orange or red. And listen, I'm not going to be the one that says, hey, guess what, we bottomed out or anything like that. But I really do think that sentiment is loud out there. I think that if anyone is looking at, YouTube videos or going over X or, just looking around the crypto space, it's very clear that we are at a very negative point in the cycle. And I get it and I understand it. And in fact, I, agree with a lot of people when they are saying, hey, I'm frustrated, I'm tired, I'm getting, upset about this. We have witnessed these areas of peak frustration before as well. I think that this chart is very interesting to look at because if we're looking at this chart logically, yeah, back in April, we did hit that red zone. We hit the orange and red zone. That was a local bottom. We go back to the summer of 2024. We hit the red zone. We hit the orange zone. That was also a local bottom. Even if we go all the way back to the bear market, again, we could see bottoms being printed here. That's why when we look at sentiment right now, sentiment has been pretty weak for quite some time. It's only now getting to the point where we are in that bearish and very bearish zone. But the main question here is, are we done with the typical crypto cycles? Because a lot of people have been saying, all right, well, if the 4-year cycle is broken, doesn't that mean that alt season is also, pretty much done with? Like there's no more alt season? Although, yes, I do agree that we are starting to see this historical cycle breaking. Even CNBC mentioned that a major historical Bitcoin cycle that dictates its price might be breaking. Now, again, what they're talking about here is that 4-year price cycle. Now, I've always mentioned that it doesn't center around the halving, right? This is saying that it has centered around an event called the halving. The main thing that we look at with the 4-year cycle is we follow the liquidity cycle. The liquidity cycle has shifted. It has changed. That will affect the typical crypto cycle. I hate that we've always tied it back to a 4-year cycle or, oh, it's because of the halving. No, we've always followed liquidity. That's why when I'm hearing these talks about like this whole 4-year cycle being over and, why we're breaking this trend, the main thing that is happening is that liquidity and the liquidity cycle itself is starting to shift. Things are changing around that. Now, I did say behind all of the noise of, our current cycle, I said no one realizes that majority of this space has been in a bear market outside of a few of the top coins. Realistically, we haven't witnessed a full bull run since 2021. The run back in November of 2024 into January of 2025 was a very small push to the upside. Ethereum has yet to go into full price discovery. Majority of alts didn't even break all-time highs, and we now have people claiming this bull run is over. How can it be over when it realistically never started? Either this was one of the worst bull runs in crypto's history, or we have yet to see the largest wave of the cycle still. And again, I'm at that point where it's either, listen, if we are in a bear market, if this is, officially starting and we already saw the top, I'm at the point where it's like, all right, well, this was the worst cycle of crypto in history. We should have just got out back in, 2021 and just never came back. But I don't think that that's the case, especially at a time where we are witnessing so many big updates around the crypto space. We have institutional grade adoption. We have policy updates. We have ETFs, going live. I mean, I just don't see how we could be at that point where, the bear market is here when all of this stuff is starting to really, wake up in a big way. We're starting to see the shift happen around crypto maturing essentially. Now, again, to really go back to sentiment, the sentiment is definitely negative. We know that it's negative just going off of Google Trends. Financial crash, for an example, the highest search term back in September and August, and technically even in October, since going back to, even 2004. It completely overshot October of 2008. Also, financial recession. This has been pretty flat for the most part, but we did see this spike to about 42. Just for reference, 42 is still pretty high. It's not as high as back in like March of 2020, but 42 is still a very significant high. Just for reference, back in like January of 2008, we were starting to see this spike up a little bit. Bear market. Again, we have those slight spikes. The spike back here in like April was about 52. We recently hit 49 in August. We hit 41 in September, and we hit about roughly 34 in October. again, these highs are just right around some of the highs going back to like 2019. This is 2020, by the way. This is a 100. Everyone was looking at bear markets during, March 2020. If we go back to that time, it's actually technically a pretty good point to, jump into crypto. And then, of course, back here in the summer of 2022, and then also back here in, 2008. Again, it's showing you that almost everyone is expecting this to be the bear market. Everyone's expecting the market just to continue to sell off. I don't think that that's the case. Again, we have been witnessing some pretty large updates happening around some key things to support crypto in a much larger way. But also, what about the other factors here? What's really been causing the price action of crypto to drop? Is it the government shutdown? Is the China, US trade deal, situation? Well, if that is the case, we did just get an update on November 1st from the White House. Fact sheet: President Donald J. Trump strikes deal on economic and trade relations with China. This was a big update. Obviously, this update happened on a Saturday, so markets didn't really get affected until Monday. The markets didn't really care about this. It kind of was already priced in. Yeah, sure, there was a few commitments, but for the most part, it wasn't like a crazy deal. I mean, listen, when we think about some of these factors, I feel like most of these markets already price this stuff in. But this alleviated all of the problems with everyone looking back at, January all the way up to April and saying, all right, well, you know what? We have another trade war on our hands. This is going to be a big problem. It's going to, hurt the markets for months. But no, this whole situation is starting to calm down already. But then we also have the next big elephant in the room, right? Which is the government shutdown. Okay, the government shutdown is now expected to last through Thanksgiving until December 1st, according to Polymarket. This would mark a 61-day shutdown, almost doubling the record. Air traffic control is now short over 3,000 plus employees. What is happening here? This is from the Kobayashi letter. Now, they built upon this, and they said, most people don't realize how bad this is. In the first 30 days of the shutdown, the US government borrowed an incremental $600 billion of debt. That's an average of $19 billion per day. And since the shutdown began on October 1st, over 3.2 million airline passengers have experienced cancellations or delays. If the shutdown persists through Thanksgiving, this number could exceed 10 million people. The US is now on track for a 61-day shutdown, which is 7.5 times longer than average, all as the labor market crumbles and the Fed cuts rates amid a complete data blackout. The system is broken. Now, yes, the system is broken, which is also why a lot of people are right now scared to touch risk on assets. I talked about this even with money market funds, right? There's like a ton of money in money market funds. It's well over like 7.5 trillion or so. Everyone's scared. Everyone's scared to park their money into anything that's risk on, which is also why crypto has been kind of ignored at this point. Everyone expects crypto to just magically go up in value, but we need, safe money to exit safe positions and get into risk on assets. But the problem is that at this moment, people are not confident enough to do that. It reminds me back to March of 2020. For those that weren't around in March of 2020 when we saw these peaks around like, oh, hey, bear market. During March of 2020, the dollar absolutely went crazy. The reason why is because everyone was getting out of stocks. They were getting out of crypto. They were getting out of all of the risk on assets, and they were hodling dollars. They were throwing it into money market funds. They were holding on to it, saving it in a bank account because they didn't know what was going to happen next. It was peak panic. At this moment, we're starting to see a few things alleviate. The only thing that we have yet to see alleviate it is the government shutdown. I think the government shutdown is becoming one of those big obstacles that's holding back safe money from entering risk on assets. I do think that this will essentially be a major, catalyst for the next wave. And it's at a time where the sentiment is extremely peak negative. Now, obviously, listen, is this a guarantee? No, nothing in this space is guaranteed. Nothing is guaranteed in finance at all. But I do think that there's a high probability that everyone right now that's getting a little bit panicked, that have sold off. I mean, listen, the market has been down for months on end. You know, most people that were going to get shaken out, they were already shaken out. I do think that the market will punish those that did exit too early, maybe panic sold. I also think that almost all of these negative situations where, you know, we have this government shutdown, it's very similar to all the noise around like the trade war. It will be alleviated over time. We just have to get through it. But I do think that this is the big reason why a lot of people have been so hesitant to, you know, buy anything outside of just throwing their money into money market funds, or, you know, just holding gold or silver, or just even saving money. I do think that, you know, people holding on to dollars at this point is kind of like the last resort, because they also understand that, you know, inflation is still there. So why save money when you could park it into like money market funds or something? But I think that the main thing to really look at here is what's the hold up, right? Like what's really holding up, you know, this cycle from, you know, continuing higher. And, you know, the main thing is just there really isn't a call to action for safe money to enter the markets at this moment, because just like the Kabaisi letter is saying, the system is broken. The system 100% is broken. And a lot of people recognize this and they expect something big to happen, very similar to like a black swan event. But I don't think that we get that, you know, before we see the markets really just go crazy like we witnessed in the past. But we'll take it one step at a time. But, you know, is the 4-year cycle dead? That's the big question. And I would ultimately say that the 4-year cycle was never alive. We just followed liquidity. That's why we haven't witnessed the markets really wake up yet, because we haven't seen, you know, fresh liquidity enter these markets. So, you know, the 4-year cycle, I think that it's a very misunderstood, you know, aspect around crypto. I think that a lot of people don't recognize that it's all based around the liquidity cycle anyways. But with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, so notifications on, because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.